Welcome back, accounting boffins. Right, we're busy with VAT. Let's do a recap of what we've done so far. Number one, remember when we're talking about VAT, we're talking about value added tax. Because very often you ask candidates, what does VAT stand for? And sometimes you'll be surprised they don't actually know that. It's a value added tax. Right, at this chart, it's important to mention that to you. Okay, now the standard rate of VAT in South Africa is 15%. Right, so that's our rate of VAT. We said that VAT is levied on goods as well as services, right? Okay, then within the category of goods, you get some goods that are zero rated, meaning the VAT rate is 0%. And this is something very often candidates tend to forget. It means that there is VAT levied on zero rated items, but the rate of VAT is 0%. Okay? Now once again, depending on the needs of the country, depending on the state of the economy, there could be items that could be moved into the zero rated basket, okay, if and when the need arises, or there could be a situation where goods are taken out of the zero rated basket into the standard rate. So think about it in terms of two baskets. General standard rate 15%, and the zero rated basket has a rate of 0%. Okay? An example of that would be bread, milk, your vegetables, etc. Again, it is there to look after the needs of the people in the economy. Okay, now you come to another category, and that is your VAT exempted. Now this one here, okay, let's just do this here. This one here is your VAT exempted. What does this mean? This one means that you will never ever have VAT levied against that service. School fees, etc. We've dealt with it in detail in previous lessons, so just go through that list again to make sure that you know which items or which services would fall under your VAT exempted, right? We also mentioned fuel, right? And if I remember correctly, I asked you to do some research on the fuel levy, where you would find out what is the fuel levy that you're paying as a consumer. So remember, fuel as well is not subjected to VAT because it has its own levy that is charged against fuel. And I'm sure it made some interesting reading when you did your research on the fuel levy. Right, then we said we have what is called a Vat Control Account, right? Now this is obviously the account that has two components to it. What are the two components? One is your VAT input. You all know that that's the VAT that we have paid. When I say we, I'm talking of the business that is registered as a VAT vendor. Right. So all the VAT that we have paid would fall in the category of input VAT. It means a business has paid the VAT, it can claim it back from SARS. Okay, then you have your VAT output, okay, and your VAT output is all the VAT that the VAT vendor has collected on behalf of SARS, okay? So therefore, if we've collected on behalf of SARS and we claim back the input that we have paid out, that amount, the difference between that will tell us either what we owe SARS or what SARS owes us. Okay, so that basically is a summary of the VAT that we have discussed so far. Let's take a look at these questions here. 1. Explain the difference between tax avoidance and tax evasion. Right, very interesting question. tax avoidance and tax evasion. Okay, what do we know about it? One, what's the difference between the two? Tax avoidance accounting boffins is legal ways of reducing the tax liability. Okay? Just to give you an example. If a company is involved with corporate social responsibility, right, they can use certain expenses which they've paid for as a tax deduction. Now, this is what we refer to as tax avoidance. Perfectly legal. It's legal ways which a business can use to reduce its tax obligations to SARS. Right? However, when we're dealing with tax evasion, people, is illegal. It is not paying the tax that you are liable to pay. Now, obviously, this is not only applicable to SARS in terms of VAT, but it's also applicable to other forms of taxation. You, as a salaried earner, there are certain deductions that are allowed for you when you're doing your PAYE. But if you are registered for PAYE and you do not submit your tax return as a consumer, as a citizen rather, in South Africa, then that is tax evasion. But when you claim back certain expenses on your tax return, for example, contributions to investments, etc., your medical aid contributions, and obviously there's a few more, then you as Joe citizen, if you're claiming back those expenses and then paying your amount that you have to pay to SARS, that's tax avoidance, which is perfectly legal, absolutely in order. But if you as Joe citizen does not submit a tax return to SARS based on your PAYE, that would fall within the category of tax evasion. That is illegal, and therefore it's a criminal offense which you could be imprisoned for. Right. The question says, the owner insisted to claim VAT output on all sales, zero rated sales included, because he will pay less to SARS. Advise. Right? Look at the question. The question says, the owner insisted to claim VAT output on all items. Obviously, you know that this would form part of tax evasion. You cannot claim back input tax on zero-rated items. Why? Because you are not submitting, you're not collecting tax on the output VAT of zero-rated items. That is why it is zero-rated. So by the same token, you can't claim back the input VAT on items that you've bought that are zero-rated. So, tax evasion, it is illegal and unethical to charge VAT on zero-rated items. This is fraud, and the owner can be charged. Understand this. When you are buying zero-rated items as a VAT vendor, you're not paying any VAT on it. By the same token, when you're selling zero-rated items, you cannot charge VAT on it because the item is zero-rated. So therefore, not all sales will be subjected to VAT output, and not all purchases will be subjected to VAT input, depending on whether it falls within the basket of the standard rate or within the basket of your zero-rated items. Remember, we alluded to that earlier on in our lesson. Is VAT paid on all items? Explain. Clearly you can see that your answer is no. VAT is not paid on what? On zero-rated items. Okay? Obviously, we've mentioned this earlier. Whenever you, say a business is selling bread. So if that business buys bread to resell, they're not paying VAT on it. So there's no input VAT. Also, you get VAT exempted items. Items, for example, we said that as with school fees, you will find that on your school fee statement, there's no VAT, meaning it is an exempted item. There's no VAT attached to that item. Next question. The average turnover of Turbo Traders is 240,000 Rand per annum. The company is not registered for VAT. Remember we said that amount can change from time to time, but I think currently it's about R1 million, where it is compulsory to register. Below R1 million, you can apply for voluntary registration. Right, okay, now explain if it is compulsory for the company to register for VAT as a VAT vendor. The answer obviously is no, because we know that we said R1 million is the minimum or the amount that you have to register if you have a turnover of R1 million. The company can register voluntarily. The threshold for compulsory registration is R1 million, and voluntary it must be more than 50,000. So let's look at this question again. Because the business had a turnover of 240,000 Rand, it's not compulsory because the threshold is R1 million, and because it's over 50,000 Rand, it can register for voluntary registration as a VAT vendor. Okay, so keep that in mind. The average turnover we've mentioned was 240,000 Rand. Explain if the business would benefit if it registered as a VAT vendor. Right, so another question now. The question now is, if this business, which is not compulsory for it to register, wishes to do voluntary registration, how will it impact? Will the business benefit from being registered as a VAT vendor? And the answer is yes. Why? The company would benefit by claiming input VAT on goods, purchases, and expenses incurred. Remember, if the business does not register as a VAT vendor, then that business is going to be paying the VAT but cannot claim it back. Think of that, right? The business is paying the VAT because obviously it's seen as an end user. But if the business is registered as a VAT vendor, it means therefore that the business will pay the VAT but can claim it back from SARS. So therefore you can clearly see that if a company, this particular company, the fact that the turnover was 240,000 per annum, right? We said, just to recap, it's not compulsory because the threshold is R1 million. But if it registers for voluntary registration, that means it now becomes a VAT vendor, this would then assist in that they would be able to claim the input VAT on goods that have been purchased, and they can also claim the input on expenses that have been incurred. Right, we come to a calculation now. It says here, goods are sold for 5,460 to a debtor, right? A 15% trade discount was given. Calculate the VAT amount due on this transaction. Right, step number one. We sold goods for 5,460, but we had given the debtor a trade discount. Okay? Just a little bit about trade discount. Remember, trade discount is calculated on the invoice price, is not recorded. And that is important. Trade discount is calculated on the invoice, but is never ever recorded. Therefore, step number one, the first thing you're going to do is to work out our amount, which is 5,460. Let's do that. Times the 15%, which was the VAT amount. Not the VAT amount, sorry, the discounted price, the trade discount. Okay? And that will give you a figure of 819. Okay? So now we take the 5460 minus the 819, and that will give us an amount of 4641. What is the 4641? The 4641 is now the net invoice price, meaning after you've worked out the trade discount, you now have the net invoice price is 4641. Right, next step. What do we now do? Now we work out the VAT on that figure, and this is what we do. 4641 times the 15%, and this will give you your VAT amount, which is 696.15. There we go. There's your VAT amount of 696.15. In other words, you took your net invoice price and then you charged the 15% VAT on that amount to give you your VAT amount of 696.15. Okay. Next calculation. A debtor, S. Smith, has not paid his account for the last 2 years. The business decided to write off the debt of 864 so that the business can claim the VAT amount back. Calculate the VAT amount on the bad debt written off. Clearly, the person has not settled the debt. Now remember, let me just take you back one step. When the goods were sold to the debtor, at that point already, because we're using the invoice basis, we're saying that we already at that point told SARS that we owe you money on the output VAT. But because we're not receiving that money, the debtor's account is now being written off as irrecoverable. We can now claim back the bad debt from SARS. Can you see? Very fair, because the debtor is not paying us, and because the debtor is not paying us, it is not fair for us to pay it over to SARS. Therefore, we can claim it back as an input. Okay, let's look at the calculation. Calculation of the VAT written off, and this is very, very, very important. Whenever you are doing your VAT calculations, keep this in mind. 15 over 115. What am I referring to? I am referring to when we want to calculate the VAT amount and we know the amount is inclusive of VAT. If that is the situation, we use the 15 over 115. As is the example here. Let's do the example. So we know now that the amount that we write, the amount of the debt is 864. So it's 864 times 15 divided by 115. And the amount is, clearly you can see, 11269. Don't concern yourself with rounding off. We'll accept 11269 as the amount that we can claim back from SARS. Now look at what we've done. The first important part of the calculation was the fact that we used 15 over 115. Let me explain that because of its importance. 15% is the VAT amount, right? And included in this total amount that the debtor owes us is the 115. Where does this 115 come from? It comes from the 100% plus the 15% of VAT. Clearly you can see, there we go, right? So when you're doing your calculation, you want to extract the VAT amount, right? You've got the total amount inclusive, you want to extract the VAT amount, therefore you take the 15 over the 115 like we did here, there's it. So your actual calculation was 864 times 15 divided by 115. Here, there's your calculation to give you the VAT amount of 112.69. This tells you now that the VAT that you can claim back from SARS would be 112.69. Okay guys, so you could see in this particular segment of our lesson, we concentrated on possible examination questions. If we have to summarize, what is important for you to take from this lesson? When you are doing a VAT calculation, if the amount that is given to you is inclusive of VAT, make sure that you use, depending on what you want, obviously. If you want your VAT amount, you're always going to take 15 over 115. If you want the sales amount only, it means you then take the 100 over 115. Now, the challenge, or rather the important thing to remember here, is that in your denominator, you always use the 115 because it includes your VAT. So it's 100 plus the 15 to give you 115. So these formula that we use to calculate VAT are very, very important. To recap, 1, if you want your VAT amount, it's 15 over 115 if it is inclusive. But if it is exclusive, then simple, it will be the amount of the sale times the 15%. But when it is inclusive, it includes the 15%, therefore 15 over 115 will give you the VAT amount. If you want the sales amount, it will be, if it's inclusive, it will be 100 over 115. Okay guys, from me, Ashraf Patel and the team, I think we've done a lot of work on VAT today. Please make sure that you work through your past papers, through activities, which will then make sure that you understand how to go about doing your calculations of VAT. Also remember, not only the calculations, but the ethical considerations and the internal control considerations as well. From me, Ashraf Patel and the team, keep your feet on the ground, reach for the stars, because you definitely are a shining star. Until next time, goodbye.